Very, very good morning to all of you, my friends. Welcome back. I hope you guys have revised what I have discussed in the previous session. So let me give you a brief about what all we covered in the previous session. When talking about marginal costing, it's a part of management accounting and it assists management in decision making. Thereafter, we discussed marginal cost, that is the cost of manufacturing additional unit, variable cost, the cost that varies according to production, fixed cost, the cost that remain fixed irrespective of production. Thereafter, we discussed PV ratio, that is the percentage of contribution to sales. We can say the formula is contribution divided by sales into 100. Thereafter, we discussed break-even sales, that is fixed cost divided by PV ratio if you want to calculate it in rupees. Further, if you want to calculate it in units, it is fixed cost divided by contribution per unit. Thereafter, we discussed the concept of desired sales, wherein it's like wherein desired profit is given, and the question will ask you to calculate that how much sales is required to earn that much of profit. So when talking about the formula, it is fixed cost plus desired profit divided by PV ratio if you want to calculate it in rupees. And if you want to calculate it in units, it is fixed cost plus desired profit divided by contribution per unit. So this is all what we discussed in the previous session. So anyone with any doubts or queries? Anyone with any doubts or queries in the part what I have discussed till now? Good morning, Khushi. Good morning, Neha. Good morning, Pooja. Good morning, Mathili. Anyone with any doubts or queries? So fine. Now let's move towards the next part of the chapter. That is the next concept, that is margin of safety. Or we can say safety margin. It means what? How much we are safe from deadline of business. When talking about deadline, it means we call it as break-even sales. That is how much we are safe from deadline of business. So let's say my deadline is at 3,000 rupees. My deadline is at 3,000 rupees and I am right now standing at 5,000 rupees. If it goes less than 3,000 rupees, we will start making loss. So the point is my deadline is 3,000 rupees and right now I'm at 5,000 rupees. So how much safe I am? 2,000 rupees. When talking about 3,000, what is 3,000? My break-even sales. That is, once I cross this deadline, I'll start making losses. And right now I'm where? At 5,000. So this is what my actual sales. So how much safe I am? 2,000 rupees. So that is what my margin of safety. So when talking about margin of safety, we can say it is simply what? Actual sales minus break-even sales. What is margin of safety? Actual sales minus break-even sales. There is one more concept of margin of safety. See, as I told you guys, once we reach the break-even sales, we recover our what? Fixed cost. After recovering the variable cost, if we are able to recover our fixed cost, we can say we are at break-even sales. Once we cross break-even sales, once we cross break-even sales, the extra sales what we are making, is what we call as margin of safety. Now, from that extra sales, after recovering the variable cost, the additional contribution what we are getting is what? My profit. So we can say that extra contribution over and once we cross break-even sales is equals to profit. So we can say profit and extra contribution are equal. So we can say profit divided by PV ratio can be one formula for margin of safety sales. Let me explain this practically, wherein let's say my actual sales is 5,000. My break-even sales is, now let's say my variable cost is 3,000. My contribution will be how much? 2,000. My fixed cost is, let's say, 1,200. My profit will be how much? 800. So this is the actual data, right? So my PV ratio will be how much? 2,000 divided by 5,000 into 100. That is 40%. My break-even sales will be how much? 1,200 divided by 40%, that is 3,000. So my break-even sales is 3,000. My PV ratio is how much? 40%. That is 1,200 rupees will be my contribution. 1,800 will be my variable cost. And my fixed cost will be 1,200. And this will be my profit. So this much part is very simple, wherein my actual sales is 5,000. My variable cost is 3,000. My contribution will be 2,000. My fixed cost is, let's say, 1,200. So my profit will be how much? 800. My PV ratio will be how much? 2,000 divided by 5,000 into 100. That will be 40%. So once we are able to calculate PV ratio, we'll be able to calculate break-even sales. That is 1,200 divided by 40%. 3,000 will be my break-even sales. So if 3,000 is the break-even sales, for break-even sales, my contribution will be how much? 3,000 into 40%. That is 1,200. So my fixed cost is recovered at this point of time. So now 3,000 is the point where I am able to recover my fixed cost. Now once fixed cost is recovered, the additional sales, how much I am doing? 2,000. Additional sales, extra sales I am doing is 2,000. Now from 2,000, how much contribution I am getting? 800. Now my fixed cost is already recovered. So my fixed cost is already recovered. So 800 will be what? My profit. So my point is very simple. Once you cross that break-even sales, the additional contribution, what we are getting is what? Profit. So what is profit? What is profit? What is this term profit? The contribution, the extra contribution after recovering fixed cost. So this profit means what? The contribution over and above fixed cost is what we call as profit. So we can say profit is equals to contribution once we cross break-even sales. So this is equals to 40%. So how much will be 100%? 2,000. So profit divided by PV ratio is also the formula for margin of safety. When talking about profit, what is profit actually? Contribution in excess of fixed cost. Once the extra contribution what we are getting, see, once the contribution exceeds the fixed cost क्रॉस करने के बाद जो एक्स्ट्रा कंट्रीब्यूशन आता है उसे ही हम लोग क्या बोलते हैं? प्रॉफिट. सो व्हाट इज प्रॉफिट? बेसिकली the profit and contribution are same when we cross break-even sales. So the contribution is equals to PV ratio. That's why we can say profit divided by PV ratio is what? Margin of safety. In short, guys, for your understanding, herein what we can see is actual sales can be divided in two parts. Break-even sales wherein we recover our fixed cost, and margin of safety sales where we start earning profit. So let's say if break-even sales is 60% of actual sales, then how much will be margin of safety? 40%. If break-even sales is 70%, then how much will be margin of safety? 30%. Anyone with any doubts or queries? I request you guys to copy this explanation, please. So we are done with margin of safety. That is how much you are safe from deadline of business. So margin of safety means what? Profit divided by PV ratio, or we can say contribution in excess of fixed cost divided by PV ratio, and contribution is equals to PV ratio. So we can calculate 100%, that is the sales amount. Yes, Anil.
Hello, sir. Good morning.
Good morning.
So what you wrote in already, what is this, sir? Above 800. Yes,
Already
sir.
recovered. Already
Okay,
recovered.
okay, sir.
One more concept I want to discuss. Wherein, let's say 2 period figures are given. Let's say my sales is 1 lakh and 2 lakh. Let's say my profit is 30,000 and 70,000. No, Anil, it is incorrect. Let's say my sales is 1 lakh and 2 lakh, and my profit is given 30,000 and 70,000. And the question will ask you guys to calculate PV ratio. Now see, variable costs keep on changing. Profit keeps on changing, right? So fixed cost is constant. So very simple. How to calculate PV ratio since variable cost contribution is not given? We can calculate PV ratio with the help of profit, wherein it is change in profit. How much the profit is changing divided by change in sales into 100. So how much is the profit changing? 40,000. How much the sales is changing? 1 lakh into 100. that is 40%. So change in profit divided by change in sales into 100, that is 40%, that will be my PV ratio. So let's write down a statement wherein sales, variable cost, contribution, fixed cost, and profit. So let's say if my sales is 1 lakh, my PV ratio is 40%. It means my contribution will be how much? 40,000. My variable cost will be how much? 60,000 will be the balancing figure. My profit is how much? 30,000. So my fixed cost will be how much? 10,000, the balancing figure. Let's take for the next year, if my sales is 2 lakh, my contribution will be how much? 4 to the 8. 80,000 will be my contribution. My fixed cost is how much? Sorry, my profit is how much? 70,000. Therefore, my fixed cost will be my balancing figure. That is. So if the 2-period figure data is given, this is the way we have to deal with it. Good morning, Mehak. So if the 2-period figures data is given, then this is the way we have to deal with it. Let's take one more question. My sales is 1 lakh and 2 lakh. Can anyone tell me what will be the PV ratio? Very good, Nikunj. Very good, Khushi. Pooja Byalal, it is incorrect. Mathili, it is incorrect. Ankita, it is correct. Pooja Byalal, it is incorrect. Pooja, it is correct. Pawan Kumar, it is incorrect. Yes, Gabbar, waiting for your answer. Gayatri, Harsh. Mathili, it is incorrect. Gabbar, it is correct. So when talking about the change, see how much is the change? How much is the change? Earlier in 2025, there was a loss of 15,000. Anil, it is incorrect. Pooja Byalal, it is incorrect. See, earlier there was a loss of 15,000 and now there is a profit of 10,000. So how much is the change in profit? Very simple. From loss of 15,000, we came to zero, and from zero, we went till 10,000. So there is a change of how much? 25,000. There is the change. See, 10,000 minus 15,000 divided by change in sales is 1 lakh into 100. So it will be 25,000 divided by 1 lakh into. Can anyone tell me what will be my fixed cost in this case? Very good, Ankita. What will be my fixed cost in this case? Very good, Nikunj. Khushi Gupta, it is incorrect. Khushi Kumari, it is correct. Yes, Pooja, Pawan, Harsh. Pooja, it is incorrect. Pooja Byalal, it is correct. Yes, Gayatri, Pawan, Neha, Kambira, Vijay. Anil, it is incorrect. It's a very simple question. Yeah, now it is correct. So very simple, guys. My sales is 1 lakh. My contribution will be 25,000. I have a loss of 15,000. So contribution minus fixed cost should be 15,000. So fixed cost is 40,000. Very good, everyone. Now it is correct. Very good, Sabitra. It is correct now. So anyways, guys, I'm done with this explanation. I request you guys to copy the explanation, please. So let's proceed further. Now let's summarize what we have discussed till now. Wherein the first point what we discussed was PV ratio. That is contribution divided by sales into 100. When talking about the next point, we discussed break-even sales. If you want to calculate it in rupees, it is fixed cost divided by PV ratio. If you want to calculate it in units, it is fixed cost divided by next one is desired sales. It is fixed cost plus desired profit and is fixed cost plus next is margin of safety sales. It is actual sales minus break-even sales. And second point, if you want to calculate it in rupees and in units, it is profit divided by PV ratio, and it is profit divided by quantity. Apart from this, we discussed one more concept when two periods data is given. So PV ratio, how it will be calculated? Change in profit divided by change in sales into 100. So this is all what we have discussed till now. We are done with this explanation. Now we'll be starting with few basic questions. So I request you guys, whatever the queries you have, any conceptual queries, you guys can please post your query. I want correct answers from everyone now. I'll be putting up variety of questions in front of you, few easy questions, few tricky questions. So right now, I'm giving you time. Whatever the queries you have, you guys can post your queries. Those who want to take the snapshot also can take the snapshot or screenshot. This is the summary of what we have discussed till now. So let's start with the practical questions now. Do post your answers with the question number. I'm just writing few basic questions. So I just want answers from everyone. Once you are done, see these questions can be solved over the calculator also. This is just to refresh your concept that what all you are, what all you have understood from all these points. So let's start with this part now. You can start solving the question. Just post the answers all together. So if it is question number 1, write down all the points and post the answer. That is, this much is PV ratio, this much is break-even sales, this much is margin of safety. Pooja, Nikunj, and Ankita, all the answers are correct of question number 1. Anil, also your answers are correct. Tanmay also. Tanmay, please recheck your answers. Neha Pandey, your answers are correct. I'm talking about margin of safety in aggregate. Pawan Kumar. So Tanmay, please recheck your answer. Khushi Kumari, your answers are correct. Maithili, answers are correct. Very good, correct answer. Yes, Mehak, waiting for your answer. You have not posted the answer, Mehak. Tanmay, please recheck your answer. Nikunj, answers are correct. Pooja Byalal, correct answer. Ankita, correct answer. Anil, correct answer. Tanmay, please recheck your answer. Neha, correct answer. Pooja, correct answer. Pawan Kumar, please recheck. I'm not asking the percentage of margin of safety. Khushi Kumari, correct answer. Maithili, correct answer. Sabitra, correct answer. Tanmay, correct answer. Gabbar, correct answer. Khushi Gupta, correct answer. Kambira, correct answer. Gayatri Sethia, correct answer. Pawan Kumar, correct answer. Those who are done with yes, Mehak, waiting for your answer.
Sir, in second question, what is the fixed cost, sir? 79,200.
7,92,000.
7. Okay, sir.
Very good, Mehak. It is correct. Now start with question number second.
Sir, question number 2, there is a calculate a base in
Break-even
writing it not.
sales.
Okay, sir.
Nikunj, correct answer of question number 2. Harsh, correct answer. Miss Harsh Kaur, correct answer. It's a simple exercise to refresh your concepts, what I have discussed. Pooja Vyalal, please check the third answer. Nikunj Doshi, it is incorrect. The selling price per unit is 20, variable cost per unit is 14, fixed cost is 7,92,000. You have to calculate break-even sales in rupees and in units. Okay. Okay, Pooja. But see, the question number second, that is the break even, the desired sales is incorrect, Pooja. Nikunj, it is correct. Pooja Byalal, it is correct. Mehak Roy, it is correct. Mehak, you have not posted the answer of question number second. Very good, Gayatri. All the answers are correct. Yes, Gabbar, you are not posting the answer. Jash Agrawal, Vijay, Neha, Pawan, Ankita. I've asked desired sales in units, Tanmay. Gayatri, it is correct. Okay, Tanmay, perfect, correct answer. Now let's start with question number third. What will be the answer? Do post your answer on question number third and fourth. Yes, Mehak, your third answer is correct. Do post answer of question number four. Pawan, it is correct. Nikunj, it is correct for question number four. So question number four, Nikunj just posted the answer. Pawan, it is correct. Ankita, very good, it is correct. Yes, question number four now, guys. Okay, so Pooja Byalal, it is correct. Very good. Tanmay, it is correct. Yes, Anil, you are not posting the answers on question number 2, 3, and 4. On question number 4, I want answers from everyone. Question number 1, 2, and 3 are straight away. What about question number 4? Yes, very good. So question number 4, I want answers from everyone. Very good, Pawan. Question number 4, now I want answers from every one of you. Yes, Miss Harsh Kaur, Kushi Gupta, Kushi Kumari, Mehak, Pooja, Tanmay, Anil, Ashok. I want answers on question number 4. Pooja, very good, it is correct. Question number 5th also, it is correct. Very good, Pooja Byalal. I just want now on answers on question number 4th and 5th. Yes, very good, Neha. What's the answer of question number 4? Anil, Mehak, Gabbar, waiting for your answers. Question number 4, I've got answers only from Pooja and Nikunj. Rest all, I have not received any answers. I want answers on question number 3rd and 4th. Sorry, 4th. So Ankita, your answer is incorrect for question number 4. Mehak, your answer is incorrect on question number 4. Kushi Gupta, your answer is incorrect on question number 4. I want answers from everyone on question number 4. Question number 1, 2, 3, everything is correct. This is the solution of question number 1. What is the actual sales? So now Pawan Kumar has got the correct answer. So only Pawan, Nikunj and Pooja has got the correct answer. Neha also correct answer. Very good now. Sabitra also correct answer. So this is the solution of question number 1. I'm erasing it now. Still many has not posted answers on question number 4. Neha Pandey, very good. Answer number 5th is also correct. I just want the answer in units. Pawan Kumar, correct answer. Very good. Anil, I'm waiting for your answers. I'm just directly writing down the answers. So Tanmay, also, it's incorrect. Kushi Gupta, it is correct. Nikunj, it is correct. This is the final answers of break-even sales in rupees. In second question, this is the solution of question number 2nd and 3rd. I've just written the final answers. No worries, that's okay. So now Gayatri, it is correct. Very good. So now start with question number 5th. What will be the answers of question number 5th? Those who are done with question number 5th, do take out my notes. I want you guys to download the notes that are available over the portal. These questions are here to refresh what we have discussed till now as far as the concepts are concerned. That is incorrect, Mehak Roy. Question number 5th answer is incorrect. Still many has not posted correct answer on question number 5. So now let's move towards question number 4, wherein my fixed cost is 90,000, PV ratio is 30%, and margin of safety is 40%. So as I told you, break-even sales, how we will calculate break-even sales? Fixed cost divided by PV ratio, that is fixed cost is 90,000, PV ratio is 30%. So my break-even sales will be 3 lakh. Now see, herein margin of safety is 40%. Since margin of safety is 40% of sales, break-even sales will be how much? 60% of total sales. As I told you guys, actual sales can be divided in 2 parts. Question number 4th answer is incorrect. Okay, it is correct, Pooja. So we can say that actual sales can be divided in 2 parts, margin of safety sales and break-even sales. So herein, if margin of safety sales is 40%, then break-even sales will be how much? 60% of the total sales. If margin of safety is 30% of the total sales, then break-even sales will be 70% of the total sales. So 3 lakh is what my break-even sales. It is equals to 60%. So how much will be 100%? 5 lakh rupees. Now we have to prepare the statement of profit wherein my sales is 5 lakh. We have the PV ratio that is 30%. So this will be contribution will be 1,50,000. My fixed cost is 90,000 given. So my profit will be how much? 60,000. What about question number 5th? I have not received answer. Many students didn't posted the correct answer. So Sabitra, it is incorrect. I've got correct answer from very few students. Mehak Roy, it is incorrect. Nikunj, it is correct. Pawan Kumar, it is correct. For answer question number 5th. Neha Pandey, it is correct. Rest everyone incorrect answer. I've got correct answers from only 3 students. Kushi Gupta, it is incorrect. What about question number 5th? It's a simple mathematics, guys. Sabitra, Kushi Gupta, the answers are incorrect. Question number 5th, Mehak Roy, it is incorrect. Methini, you have not posted the answers. Miss Harsh Kaur. Pooja Byalal, it is correct. I think you posted the answer earlier also. Rest all waiting for your answers on question number 5th. Kushi Kumari, it is incorrect. See solution of question number 5th. Selling price per unit is 20, variable cost per unit is 14, fixed cost is 7,92,000. You are required to calculate the number of units to be sold to earn a profit of 10% on sales. I've got correct answer from only 3 students. Sabitra, it is again incorrect. Tanmay, it is correct. Now see guys, let's say unit sold be X. So my sales will be how much? 20 into X. See, my selling price is 20. Units sold is X. So my sales will be bought price into unit. So it will be 20X. Sabitra, again, it is incorrect. So sales will be 20X. Variable cost will be 14X. Contribution will be 6X. Fixed cost is 7,92,000. Contribution minus fixed cost should be profit. And profit should be how much? 10% of sales. So 10% of sales means 10% of 20x, that is 2x. So in short, my contribution 6x minus 7,92,000, my fixed cost should be 2x. So we can say the value of x will be 1,98,000 units. So it's a simple mathematics, what I want you guys to understand. So yes, many students didn't posted the correct answer on this question. Yes, Gabbar, Khushi, what went wrong? Methili, Pooja, Jash, Anil. So those who want to take the screenshot can take the screenshot. I'm done with these basic questions. Now let's start with some advanced question. I request you guys to please download the material what I have provided over the portal. Question number 4. My sales is 5 lakh. My PV ratio is 30%. So my contribution will be how much? 1,50,000. So sales minus contribution will be what? My variable cost. I hope it is clear, Mehak. Anyone else with any doubts or queries? So once you are done with all these points, I want you guys to post your opinion on question number 1. I want you guys to post your answer on question number 1. Now we'll be going a bit slow because, these questions are good. So I want you guys to post your opinion on question number 1. So waiting for your answers on question number 1. Rest, if you guys have any doubts or queries in this part, you guys can please post. And I want every one of you guys to attempt these questions. These questions are from past examination. So make sure everyone should post your answers on question number 1. It's not very easy, Methili. I request you guys to please download the material what I have provided. I want you guys to post your opinion on question number 1. Opinion means post your answers on question number 1. So let's see who answers first. Question number 1 from my material. See, nothing new in question number 1. The point is you have to read the question with patience. See, the concepts are covered. Everything is covered. The point is you have to figure out that how to solve the question. Question number 1, waiting for your answers. So do post your answers. Waiting for your answers on question number 1. Take your time and post your answers. See, guys, make it a habit to solve new questions on your own. See, solutions are there in the material or somewhere, but the point is make it a habit that when you find a new question, try to attempt it. See, the purpose of putting up all these questions in front of you is that make it a habit that okay, अगर कुछ नया question आता है, how to face it and how to solve it. So, waiting for your answers on question number 1. Yes, Pooja, tell me. So, I'm not asking break-even sales in rupees. Herein, I want the break-even sales in units. Pooja, I think one of the student posted the answer. The answer is incorrect. You can take the screenshot of question number 1, Mehak. This is the question what I want you guys to solve. So Pooja Byalal, it is correct. Yes, here two data are together. Neha Pandey, it is correct. Pooja Byalal, it is correct. Very good, Neha and Pooja. Yes, I want everyone to attempt this question, giving you last 2 to 3 minutes time to post your answers. Yes, Nikunj, I have not received answer from your end. Do post your answer, Nikunj. Pawan Kumar, it is incorrect. It's a simple question, but yes, there is the trick. What you guys have to just understand. The concept of opportunity cost is already discussed in chapter number 1. That is the cost of foregone opportunity. Herein, this concept will come into picture. It is incorrect, Gabbar. Rest all. Yes, Mehak, waiting for your answer. Kambira, Gayatri. Sabitra. It is incorrect, Nikunj. Yes, Mehak. Pooja. Ashok. Tanmay. Anil. So fine, let's start with question number 1 from my material, wherein a newspaper presently sells 1 lakh copies of its morning daily. A newspaper presently sell 1 lakh copies of its morning daily, but it want to publish evening daily also. The particulars are given. The selling price of both the categories of newspaper are given. Variable cost is given. Fixed cost is given. Now, apart from this data, a very important line is given, that a sale of morning daily will fall at the rate 1 copy of every 10 copies sold of evening daily. So for every 10 copies sold of evening daily, there will be a loss of 1 copy of morning daily. Okay, I've received few more answers. Okay, so Mehak Roy, it is incorrect. Gayatri Setia, it is incorrect. So sale of morning daily will fall at the rate 1 copy of every 10 copies sold of evening daily. You are required to calculate the break-even sales for evening daily per week. So morning daily. Now see, selling price is given for both the categories of newspaper. Variable cost is given. Evening daily also they have given the selling price as 50 paisa and 22 paisa. Now the question is asking us to calculate the break-even sales of evening daily. Admin sir, everything is visible? Admin sir, are you there?
Yes, sir.
The board is visible, sir?
Yes, sir. Yes, sir.
Okay, Mehak, I want you to refresh your screen. Internet connection, I think everything is correct from our end. Now see, very important point, the sale of morning daily will fall at the rate 1 copy of every 10 copies sold of evening daily. So it means what? What the question is saying, for every 10 copies of evening daily, they are saying there will be a loss of 1 copy of morning daily. This is what the question is saying, that for every 10 copies of evening daily, there will be a drop in sale of morning daily by 1 copy. So it means we can say for 10 copies of evening daily, we can say there is a loss of 1 copy of morning daily. It means what? There is a loss of contribution of 80 paisa. There is a loss of contribution of 80 paisa of morning daily. So 10 copies, 80 paisa. So 1 copy, how much is the loss? 8 paisa. So it means what? For every 1 copy of evening daily, the selling price is 50, variable cost is 22 paisa, but there is an opportunity loss also. of 8 paisa. See, again I repeat, for every 10 copies, there is a loss of 1 copy of Morning Daily. So for every 10 copies, there is a loss of 80 paisa of contribution. So for every 10 copies, 80 paisa. So for every 1 copy, there is a loss of 8 paisa. So we can say, from when talking from company's perspective as a whole, how much profit we are earning on Evening Daily, how much contribution we are earning from Evening Daily? 20 paisa per copy. My fixed cost is given in the question. That is 10,000 per week of Evening Daily. So break-even sales is what? That is 10,000. I request you guys to copy the solution. Pawan Kumar, it is incorrect. Again, whatever the questions I'm putting up, do try to attempt these questions. See, when I will solve the question, you'll find that the solutions are easy. But at least I'm just giving you time to solve. So do solve these questions. Trust me, you'll feel much better after solving the question. If I am discussing the question again, you'll feel much better. Anyways, any doubts or queries in this part, you guys can please post your queries. Yes, Nikonj, Suhaira, any doubts? Mehek, any doubts? Kambira? I want every one of you guys to attempt the question and post your answers. Yes, Methili, any doubts? Harsh Kaur, any doubts? Nikonj, any doubts? Very good, Nikonj. That's okay, it happens sometimes. Gabbar Thakur, any doubts? Yes, if some point is given in the question, so there is something important about that point. That's why it is given in the question, Gayatri. No worries, you will be able to solve the question. If you are present in the previous session, Suhaira, you'll be able to attend. You'll be able to solve the questions. Anyone? Methili, any doubts? Anil, you are not posting the answers. Pooja, any doubts?
Sir, in the question, it says sales of Morning Daily will fall at 1 copy. So, will fall means it is a loss, sir.
Yes, fall means sales come hoga. The sales will be reduced by 1 copy for every 10 copies of Evening Daily.
Okay. I'm thought that every 10 copies of Evening Daily, the morning is 10,000 total. I'm like,
No.
okay, sir.
Those who are done with this question, I want you guys to attempt question number 5th and I want answers from everyone. Do attempt question number 5th of my material. Nothing new with the concept here, and there is no concept of opportunity loss or anything. It's just a plain question what we have discussed till now. The point is you have to reach each and every word of the question carefully. Rest, there is no rocket science in this question. So let's see who answers first. Question number 5th of my material. even with even zero knowledge of marginal costing, you will be able to solve this question. The point is, it's just simple mathematics, and you need to be very practical while solving this question. So try to attempt question number 5 from my material. This is the first page. You can take the screenshot, Mehak. And this is the second page. Pawan Kumar, it is incorrect. Take your time and solve the question with peace. Read and each and every line of the question carefully. So half of the work is done when you read the question carefully. These types of questions examiner do ask. Do attempt the question, be it right, be it wrong. Read the question, each and every line of the question twice, thrice, and do attempt the question. Giving you 2 to 3 minutes time, 3 to 4 minutes time. Okay. So I've got answer from Pooja Byalal. Very good, Pooja. Be it right, be it wrong, at least attempt the question. Make it a habit, because exam mein solution nahi milega. You'll be getting a question and you have to attempt. So make it a habit that whenever you find a new question, at least try to read it twice, thrice, and attempt the solution. Very good, Neha. It is correct. Very good, Pooja Byalal. It is correct. So I'm just reading the question for your reference, wherein the details of the output presently available from a manufacturing department of Kunal Synthetics Limited are as follows, wherein average output per week is 48,000 units from 160 employees. Saleable value of output is 6 lakh and the contribution made by output toward fixed expenses and profit is 2,40,000. It means what? The sales is 6 lakh, variable cost is 3,60,000 and the contribution is 2,40,000. I'm just writing down the data. The board of directors planned to introduce more automation in the department at a capital cost of 1,60,000. So the board is planning for more automation in this department with the additional capital cost of 1,60,000. The effect of this plan will be to reduce the number of employees to 120. So earlier the employees were 160. Now they are planning to reduce the employees to 120. But very important, they are saying, but to increase the output per individual by 60%. So see, they are saying that instead of 160 employees, now we'll be working with 120 employees. However, the output per individual will increase by 60%. So it means the workers will be working little more. Now, to provide necessary incentive to achieve the increased output, the board intend to offer 1% increase in piece rate. So the board intend to offers 1% increase in piece rate of 1 rupee per article for every 2% increase in average individual output achieved. To sell the increased output, it is necessary to decrease the selling price by 4%. You are required to calculate the extra weekly contribution. So it's a good question. Anyone ready with the answer? The question is, Pawan Kumar, see, what is the asking in question? See, the question is asking, you are required to calculate the extra weekly contribution resulting from the proposed change and evaluate for the board information the worth of the project. That after incurring this capital cost of 1,60,000, how much extra we are earning in a week? That is after these changes. See, currently we are working with how many employees? We are working with 160 employees. And we are getting an output of 48,000 units. Now, when talking about the proposed, so how much output we are getting per employee right now? $48,000 divided by 160. That is 300 units a worker is manufacturing. A worker is manufacturing how many number of units? 300 number of units. Now, when talking about the proposal, what they are proposing? First, reduce the number of employees to 120. So now new number of employees will be how much now? 120. output per employee will be how much? See, currently output is 300. Now, average individual output will be increased by 60%. So it means 300 plus 60% also you can write down. So this will be 480 units. So how much output will be getting overall in a week? Per individual output is 480. And the total number of employees are 120. So we'll be getting an output of 57,600. See, half question I have solved only. So very good, Nikunj. Your approach is correct. Pawan Kumar, now it is correct. Very good, Nikunj. Yes, rest other students, you guys are understanding the concepts or not? Yes, Ankita, Khushi, Ashok. Anyone with any doubts? Gabbar, any doubts till now? So see, the proposed change is first to reduce the number of employees to 120, increase the output per employee by 60%. So now per employee output will be 480 units. So in aggregate, how much will be my output? 57,600. Now, since the workers are working little more than the previous plan, so they will be expecting some incentive. So what they are saying is, see, to provide necessary incentive to achieve the increased output, the board intend to offer 1% increase in piece rate of 1 rupee. Currently, the piece rate is 1 rupee. So they are saying that the incentive will be 1% for every 2% increase in output. So current piece rate is how much? ₹1. Incentive will be how much? For every 2% increase in output, 1% will be the incentive. So how much percentage the output has increased? 60%. So every 2% increase, 1% is the incentive. So for every 60% increase, 30% will be the incentive. So incentive will be how much? So new piece rate will be how much? So currently the piece rate per article is ₹1. The incentive is what? For every 2% increase, 1% will be the incentive. So it means what? For every 60% increase, 30% will be the incentive. So now this is the summary of the question. What is there? Now let's start with the solution now. Now sales. The question is asking that if we want to sell 57,600 units, we have to reduce the selling price. See, to sell the achieved output, it is necessary to decrease the selling price by 4%. We have to reduce the selling price by what? 4%. So now, currently my sales is 6 lakh. For how many units? 48,000 units. My new number of units will be how much? 57,600. We can alternatively say that 6 lakh is the sales for 48,000 units. So for 57,600 units, how much will be my sales? 6 lakh is my sales for 48,000 units. It means the new selling price will be what? 12.5. Now we have to reduce the selling price by 4%. So if we subtract by 4%, we will get the new selling price as 12. I'll solve it in that way only. We'll prepare a working note of selling price also. 6 lakh is the total sales earlier with 48,000 units. So my selling price was 12.5%. Now there is a decrease in selling price. So that is 0.5. So revised selling price will be how much? Will be 12 rupees. So now my new sales will be how much? 57,600 is the output into 12 rupees. That is 691,200. When talking about variable cost also, earlier my variable cost was 3,60,000. For how many units? 48,000 units. So for 57,600 units, how much will be my variable cost? 4,32,000. Now, guys, very important. This 4,32,000 includes the piece rate also what we are paying to the workers. That is, just for your better understanding, writing it here for your reference, the amount includes the piece rate at the rate 1. This 4,32,000 includes the piece rate that is paid at the rate 1 rupees per article. But 30% incentive, that is 30 paisa incentive, is not included on piece rate. So this 1 rupees is already included in this. So we have to simply deduct incentive only. That is 30 paisa we are paying incentive into the number of units is 57,600. So how much incentive we are paying them? 17,280. So my new contribution will be how much? Two 41,920. 2,41,920. So earlier I was making a contribution of how much? 2,40,000. My new contribution is how much? 241,920. So extra weekly contribution is how much? 2,41,920 minus 2,40,000 my earlier contribution. So 1,920 rupees is my extra weekly contribution. Very good. The answers are correct. Very good, everyone. I request you guys to copy this explanation. Take your time. Try to understand what I have discussed. If you guys have any doubts or any queries, feel free to speak to me. I'm here to address all your queries. It's nothing, but the point is, read each and every word of the question carefully and then start with the solution. 50,000, Pawan Kumar. Yes, anyone with any doubts or queries? The question is simple and clear. The concepts of generally the marginal costing doesn't imply, it's just a simple calculation, wherein the first point they are saying that they are manufacturing 48,000 units with 160 employees. So per individual output is how much? 300 units. So individual is manufacturing 300 units. So we have to solve the question step by step. Go step by step and approach for the solution. So average output was 48,000 for 160 employees. So per employee output was 300. Now they increased the output by 60% per individual. So the new output per employee is 480. The number of employees are 120. So the output now, revised output will be how much? 57,600. So this was the first part. Now the key is the calculation of incentive, wherein the language says that currently the piece rate is 1 rupees per article. Now they are saying that since the output is increased from 48,000 to 57,600, further the employees are reduced. And per employee, the output is more by 60%. So we need to give some sort of incentive to the employees. So they are saying that the incentive will be given, wherein for every 2% increase, 1% will be the incentive. So the total increase in the output per individual is by 60%. So the incentive will be 30% of the piece rate. So the current piece rate is how much? 30 paisa. The current piece. We have to consider the cost. Maithili, any doubts? Yes, Mehak, any doubts? Any doubts in this question, Mehak? Suhaira, any doubts? Maithili, I hope you are thorough with the solution.
Yes, sir, I understood. But why we calculate sales for that value of 6,91,200 for 57,600 into dollars, sir?
Yes. So we have to calculate the sales figure, right, Maithili?
Yes, sir.
So earlier the sales was how much?
6 lakhs.
For how many units?
48,000 units.
Right? So what was my
Yes.
selling price?
12.5.
Now there is to sell the output, current output as per the proposed plan, the selling price is to be reduced by how much?
0.5.
By
4% decrease.
4%.
So,
So
yes, sir.
12.5 minus 4% is how much? 12
0.5.
rupees. Right?
Yes, sir. Yes, sir.
So now the units are 57,600. The price is 12 rupees. So what will be my total sales?
Yes, sir. That's my question. Why we take 57,600 units instead
See,
of 40?
earlier, see, now what the question is saying, when you solve the question, try to understand the question. See, earlier this was happening, right?
Yes.
They have
Yes,
spent
sir.
1,60,000 at a capital cost to increase the output also and to earn extra profit, right?
Yes, sir.
So now earlier my output was 48,000. Now my output is 57,600.
So we need to take as a difference of 57,600 and 48,000, sir.
No, no,
Or
no. Up to you. You can do this. You are just using that incremental method. That is more tricky. So simply at 48,000 units, how much profit I was getting?
2,40,000.
Now at 57,600, how much profit I am getting?
2,41,920.
Right? So simple. Keep the same thing simple only, na?
Okay, okay, sir. incentive.
Anil, any doubts? So fine, guys, let's take a break of 15 minutes. Have a cup of coffee. I'll be discussing few more good questions and we'll be testing your brain. So take your time. Let's take a break of 15 minutes. I'll be back after 15 minutes with few more good questions wherein we'll be covering the concepts what we have discussed till now. So Edmund sir, are you there?
Yes, sir.
Please put the break.
Okay, sir.
Yeah, thank you. If the depreciation rate is given, Sabitra, yes, we can do so. But since the depreciation rate is not given, we will just ignore. Yes, it is 70 to 75%. It is numerical, Pawan. Let's meet after a break. If you have any queries, you can speak to me. So shall we start?
Please continue, sir.
Welcome back, my friends. So now let's start with one more question. I just want to discuss one very simple question, and I want you guys to post your answer on this question. After these two questions, I think many students will be restless. They, okay, examiner do ask these types of questions also. So just putting up a very simple question in front of you guys. So I want you guys to post your answer, at least attempt this question. It's a very easy question now. I want you guys to post your answer on this question. A manufacturer manufactures 2 lakhs units of a product at a cost of 4.5 per unit. Later on, it manufactures So a manufacturer produces 2 lakh units of a product at a cost of 4.5 per unit. Later on, it manufactures 3 lakh 50,000 units at a cost of 4.2 per unit when its fixed overheads are decreased by 30%. You are required to calculate variable cost per unit and fixed cost. So it's a simple mathematics. I want you guys to attempt this question. Again, see guys, it's very easy for me to just read the question and solve that question. But the point is, I just want to get the maximum out of this session. So I want you guys to attempt the questions what I'm putting up so you will get a better idea and understanding how to face the question, how to face the challenging questions in exams. So that's the reason why I'm just giving you time to attempt the question and post your answer. So take it on a positive note and try to solve this question. I'm waiting for your answers now. A manufacturer manufactures 2 lakh units of a product at a cost of 4.5 per unit. Later on, it manufactures 3 lakh 50,000 units at a cost of 4 rupees 20 paisa per unit when its fixed overheads are decreased by 30%. At least try to attempt the question, be it right, be it wrong. Do post your answers. So it will help. I mean, it will help you guys a lot. That you'll make it a habit that okay, I'm ready to face new questions in exams because these days the papers are on the trickier side. So make it a habit to face new questions and challenging questions. So waiting for your answers. And this time I want answers from every one of you guys. And this is not a tricky question, it's an easy question, simple mathematics question. The answers are correct, Pooja and Pavan. That I don't know. Everything is given in the question. Do you really think examiner will give you this opportunity wherein you can ask cross question to the examiner? Treat it like that it's a question from your examination, how you will attempt it. These types of questions generally come with a weightage of 4 marks. A simple mathematics. The formula for this question is variable cost plus fixed cost is equals to total cost. Now, the point is how you apply this formula, it's up to you. I'm expecting variable cost per unit and fixed cost. Your answer is incorrect, Gayatri. Yes, Nikunj, Tanmay, quick. Examiner is not going to give you that much of time. Yes, Ankita, waiting for your answer. Quick, guys. Last 2 minutes for you. Again, the solution is important, but you have to complete the solution in a frame of time. So, Neha Pandey. Neha, it is incorrect. Fixed cost remain constant at all the level of production. Yes, there is a 30% increase. Sorry, 30% decrease. You have to tell me the marginal cost and the original fixed cost. Original fixed cost means the original fixed cost. So the fixed cost of this data. Yes, Ankita, quick. Khushi Gupta, Khushi Kumari. Suhaira, it is incorrect. Be it right, be it wrong. Do post your answers. Make it a habit to attempt the question. See, if I discuss 100 questions in class, I'm damn sure examiner, if the paper is on the trickier side, the examiner is going to ask you 100 first question. So the point is, there is no fixed pattern in cost accounting or financial management also. If you solve 100 question, examiner can ask you 101st question. So the point is, make it a habit to attempt new questions, focus on the concept. That's what is the key. Mehak, it is incorrect. You have to tell me the total fixed cost and variable cost per unit. Methili, it is incorrect. Yes, Nikunj, Pooja, Gabbar, Kambira, Anil. Last 1 minute for you guys to attempt this question. Gayatri, it is incorrect. Appreciate your effort, but it is incorrect. That's okay. It happens. Mathili, it is incorrect. Neha Pandey, very good. Now it is correct. Very good, Neha. So time's up now. So let's start with the solution now. What the question is asking us? We have to calculate the variable cost per unit and the fixed cost. So let's assume variable cost per unit be X and assume fixed cost total by. Let's assume that the variable cost per unit be X and fixed cost should be equal to what? The total cost is 4.5 per unit. So 4.5 into 2 lakh. So this will be 9 lakh rupees. Similarly, in the second case, 3,50,000 into X plus. See, the variable cost is decreased by 30%. Decreased by 30% matlab, if it is Y, then it will be Y minus 30%. We can say Y minus 30%. So this will be what? 0.7Y. This should be equal to how much? 4.2 into 3,50,000. So this will be 14,70,000. Now we are ready with the simultaneous, equation. So let's equate it. So let's multiply this equation number 1 with 0.7. So this will be 1,40,000 X plus 0.7Y. This should be equal to 6,30,000. This will be 3,50,000 X plus 0.7Y should be equal to 14,70,000. Changing the signs now. This is what you must have learned in grade 4, 5, 6 and 7. Simultaneous equation method. Suhaira, it is incorrect. Very good. Nikunj, it is incorrect. So let's cancel this. Plus minus, it will be 0. And this will be how much? So this will be 8,40,000 minus, and this will be 2,10,000 X. Therefore, substituting value of X in equation 1. Let's say this is equation 1. So it will be 8 lakh. Two lakh into 4 plus Y is equals to 9 lakh. So value of Y will be what? Sorry. A simple mathematics. Anyone with any doubts or queries, you guys can please post your queries. I'm done with this question. So as I told you guys, marginal costing is all what about concepts. There are no fixed formulas in marginal costing. The point is, try to memorize the concepts. Practice as many as possible question as you can. That is the key. I request you guys to copy the solution. Yes, Tanmay, any doubts? I request you guys to copy this question and the explanation. These types of question examiner can ask with the weightage of 4 marks. Sometimes these questions can come in multiple choice questions also. These points examiner can mix up with other questions also. So that is the key. Let's move to question number 7 of my material, Splash and Flash. I request you guys to open question number 7 from the material what I have provided. So, giving you 2 to 3 minutes time to attempt the question. Try to attempt the question. Read the question with patience. See, half of the work is done when you read the question carefully. So, read the question carefully. Giving you 3 to 4 minutes time to attempt the question. At least attempt the question. See, I'll be teaching you guys. I'll be putting up the solution in front of you. But before I discuss, I want you guys to read the question and attempt the question. So, giving you 3 to 4 minutes time for question number 7, for the students who are watching our portal or YouTube, those who have not downloaded, again, when you find these types of question, break down the question, write down the extracts of the question, and then proceed for the solutions. Anyone ready with the answer of the first part? The first part is very easy. So let's read the question now. Ever Forward Limited is manufacturing and selling two products. I'll be writing the extracts of the question and I want you guys to attempt this question. So Ever Forward Limited is manufacturing and selling two products, Splash and Flash, at a selling price of 3 and 4 respectively. So question number 7. Splash and Flash. There are two products, Splash and Flash, wherein the current selling price is 3 and 4. I'm just writing the question over the board. So the current selling price is 3 and 4. Now, the following sales strategy has been outlined for the year 2025, wherein the proposed sales is 7,20,000 in case of Splash and 3,50,000 in case of Flash. So proposed sales is how much? 7,20,000 in case of Splash and 3,50,000 in case of Flash. Further, it is given that to meet the competition, the selling price of Splash will be reduced by 20% and that of Flash will be by 12.5%. So we will write down the revised selling price also. Revised selling price in case of Splash, it is reduced by 20%. So 3 rupees minus 20%. The revised selling price will be 2.4 in case of Splash and 12.5 is the reduction in Flash. So 4 minus 12.5%. 3.5 in case of Flash. I'm doing nothing, just writing down the question. Now, break-even is planned at 60% of the total sales of each product. So break-even sales is what? Break-even sales is planned at 60% of the total sales of each product. So my total sales is how much? 7,20,000. So 60% will be how much? 4,32,000. I'm just teaching you guys how to attend lengthy and bit tricky question. This is not a tricky question. The point is, when you find these types of questions, sometimes the information is jumbled up. The point is how to approach the question. So I'm just writing down the breakup of the question. So they are saying selling price is this much, proposed sales is this much. So we have calculated the revised selling price, that is 3 minus 20% and 4 minus 12.5%. Break-even sales is 60% of actual. So 720 into 60% and 3 lakh, 2,10,000. I'm just writing down the question. Profit of for the year to be achieved is planned at 69,120 in case of Splash and 17,500 in case of Flash. Profit is also given, wherein profit is how much? 69,120 in case of Splash and 17,500 in case of Flash. Further, the additional data is also given, wherein this profit, this much profit will be possible only when, what it is saying, that this would be possible by launching a cost reduction program and reduce the present annual fixed cost of 1,35,000 as allocated to as allocated as rupees 1,08,000 to splash and 27,000 to flash. So see, current fixed cost is how much we have to calculate the revised fixed cost. Herein, the question is saying that this sales is achievable, this revised standard selling price is achievable, this break even sales is achievable, and this profit is achievable only when we reduce the current fixed cost. That is, the current fixed cost is what? 1,08,000 and 27,000 of splash and flash. So this is not the revised fixed cost. This is the current fixed cost. So they say that this is achievable only when we are able to reduce the fixed cost. So the point is, the current fixed cost is given. That is 1,08,000 and 27,000. We have to reduce these two fixed costs. Then only this much profit is achievable. The question is saying this much profit is achievable only when we reduce our fixed cost. This is the current fixed cost. We have to calculate the reduced fixed cost. I think you are required to present the proposal in financial term, giving the following information: number of units to be sold of splash and flash to break even, as well as the total number of units of splash and flash to be sold during the year. So the number of units for break even and the number of units of total sales we have to calculate. It is easily manageable. Reduction in fixed expenses product wise, that is that leads to the cost reduction program. That is, ये cost reduction program की वजह से कितना fixed cost कम हुआ, that is what you have to calculate. So you have to calculate what? First, the units of total sales, comma, break even sales. Second, the reduced, or we can say the new fixed cost. And third point, the difference in fixed cost. That is current minus proposed. So this is what the question is saying. This is the breakup of the question. So this is the way you have to attempt these types of questions. So ultimately the question is very simple, but the language is a bit complicated. So the point is, don't get confused when you find these types of language. The point is, try to prepare the extracts of the question and then attempt the question. So now what I want from you guys is attempt the question. See, this part is easily manageable. This part is the key. This part is the key. And these two parts are homework for you. This question is homework for you. I have discussed this question in detail. There are many students who are not being able to solve last 2-3 questions. They're finding that, okay, it's going a bit fast. The questions are tricky. No, guys. The point is, read the question carefully. Try to break down the question and make attempt to solve the question. So herein, this language I have broken into so many parts. These 2 points you have to calculate. That is the key. This is already done. This, so anyone can calculate. You have to calculate the revised or reduced fixed cost, and then the difference between the current fixed cost and the fixed cost as calculated. So that question is homework for you. The purpose of discussing this question is just to understand you guys that how to break the language of the question. Let me check. There are few answers I have received. Very good, Neha. Very good, Mathili. But again, the final fixed cost I'm expecting from you guys. Very good, Gayatri. Appreciate your efforts. I can't get your name. This answer is incorrect. The person who posted the message at 9:21, I'm not getting your name. Neha Pandey, the reduced fixed cost is incorrect. Pavan Kumar also, the reduced fixed cost is incorrect. So anyways, I want you guys to attempt this question at least. So when you find these types of questions, break the language of the question and then attempt the question. 1 second, I've got one more answer. No, this answer is incorrect. I can't get your name. It's showing dash. Pavan Kumar, this answer is incorrect. So read the question carefully with patience. Try to break down the language of the question and then attempt the question. No one can stop you from scoring good marks in exams, and you can solve any question, be it any chapter. The point is understand the language, break the language of the question, and then attempt the question. So enough of discussion on today. This question is homework for you. I want you guys to post the correct answer. That is the first point. What is the reduced fixed cost? This question, if you are thorough with the concept, you can easily solve it on calculator also. Easily manageable on calculator, this question. But the point is, you should be thorough with the concept. This question, let's say this question is of 8 marks. Trust me, guys, if you are thorough with the concept, you'll be able to solve it on calculator. No need to even write anything in the notebook. You can get the solution by calculator only. But still, since you have to present, so it will take time, 3 to 4 minutes. So it's a scoring. I mean, these types of questions are quite scoring, but the point is you should understand the language. You should be thorough with the concepts, then only you will be able to. So enough of discussion on this chapter today. There are 2 more sessions wherein I'll be discussing many concepts relating to the key factor, shutdown point based question, sales mix based question, make or buy based question. So the coming 2 sessions are going to be very important. So make sure every one of you are present in the class. Plus, come prepared. Do revise what I have discussed. Else you won't be able to understand the concepts. Apart from this, if you have time and patience, what you can do is that revise the basic concept, then refer any graduation level books and try to solve the questions, basic question, very basic question. See, before approaching the advanced question, you have to be thorough with the concepts. So the point is, you can approach any of the graduation level books, solve few questions over the calculator. Trust me, it will help you to develop confidence that, okay, I'm thorough with the concepts. Once you are like confident enough, then you can start approaching the questions of study material, past practice manual. This chapter is the most interesting chapter. Every question is a new question, a new challenge. The point is, if you love costing, you will find this chapter as the most interesting chapter. You can find it anywhere, Mehak, anywhere. Any graduation level book with this chapter, marginal costing, just try to attempt few questions for understanding the concept. These types of questions examiner don't ask that are there in the graduation level book. But yes, these questions you have to solve for better understanding of the concept. Solve 20, 25, 30 questions. The easy question, quick question. Once you are thorough with the concepts, then you can start approaching with the final questions of study material, past practice manual. So, thank you so much for your time and patience and for active participation in the session. Make sure everyone should come prepared in the coming session. Do revise what I have discussed till now. Today is Saturday. So I think next class is on Thursday. I think it is on Thursday. So you have lots of time. So revise what I have discussed. Try to attempt the questions, what I have put up. And then see you guys in the coming session. Till then, good luck. Thank you so much. Admin sir, I'm done.